Hey everyone, happy Thursday, October 26th. It's about 10:25 on the West Coast and time for another market updates. Last week was a tough one, so hopefully things bounce back this week. We got a lot of new home sales data, which is we'll go over here in a second. First thing up was September new home sales. Those were up 12.3%. That's why I have the exclamation mark there. That's a big number. Year over year now, they're up 34%. Taking a closer look, their annual sales pace now is up to 759,000 units. For sale, it's down a little bit, down to 435K out there. Their monthly sales pace, or their for sale, reported at least, is 6.9 months. But when you look at the monthly sales pace and how many are actually completed, that are actually done, there's really only about 1.2 months available out there. And one other thing to keep in mind here, that I believe 60% of their sales are just air. It's either hasn't started yet or is in construction, so they're not done yet. So they're selling properties before they're even done. They're filling the gap with not a lot of existing inventory out there. And then the median home price is down 3% to 419,000. But keep in mind that has to do with the mix of homes sold. So if builders are building more lower price homes, which they should be, then the median home price will go down. So that doesn't mean your home is worth less and so forth. The next thing we got was pending home sales. So these are homes that haven't closed yet, existing homes, not new construction, but are pending and are under contract. Those were up 1.1%, still down 11% year over year. These were actually supposed to be down 2%. So this is a pleasant surprise this morning that this went up. We're still, this index 100 is a higher level activity than 2001. So 72.6 is not too good for 2023. But keep in mind, like Dr. Lawrence Yun says here, that he's a chief economist for NAR, inventory remains tight, which hinders sales but keeps home prices elevated. So good news for current homeowners, their home prices are staying elevated, but not good for people looking to buy because there's not a lot out there, and it's keeping prices higher. So with inventory, with that in mind, as far as inventory, there was an article from Redfin this week about how, listings were up 1.4% month over month, which is a big jump, since the biggest jump, I believe, since February 2022. But keep in mind, this is all seasonal. As you can see, every year about this time, we see things, we see things come up. So as you look, it's kind of falling off a cliff here. We can go back to, pandemic basically, where this is normal. This is our normal market. It was already kind of starting to come down from those 2014, 2015 years, but now we're way down here. So as you can see, we're only about 1.13 million existing home inventory out there right now. So a really low number. So keep that in mind, when you look at the market. So a lot different than it was in years past. And really things haven't recovered inventory wise since the pandemic. Next thing, this is really important. We got this today. This is the quarter three GDP first readings. The first time they look at what they think quarter three GDP is going to be, that was estimated to be about 4.3% growth, which is a big number. That came in at 4.9%. The markets actually handled this pretty well, surprisingly, and it had to do with the consumer side. There was a number in there that the Fed is really focused on, consumer spending, and that missed expectations. So that kind of jives with what they were saying last week about a shift in demand with the consumer, which is good. Basically, people are not spending as much money on stuff they don't need and basically spending on things they do need, which is, what we should be doing. Initial job claims. Again, this is important. We know that the Fed is paying really close attention to jobs. This has stayed really pretty low, and that just shows that, employers right now are trying to hold on their employees as long as possible. It was estimated to be about 209,000, came in about 210,000, so slight beat there. But continuing claims jumped quite a bit. I believe it's 7 straight months now that continuing claims have risen. And what that shows is that when someone loses their job, they're having a really hard time finding another job. So again, hopefully the Fed's paying attention. That's not necessarily a sign of a super strong labor market. Miscellaneous stuff. So CoreLogic, real quick, CoreLogic loan data. CoreLogic takes a look at, how people are doing repaying their loans. This is important in my industry. So are people, late on their payments? Are they getting foreclosed on? Things like that. And those numbers continue to be at really low levels. They actually dropped month over month. So people are obviously starting to get a little, late on their credit card payments and things like that, which we've seen. But as far as paying their mortgage, they're doing a really good job. So that's good to see. People are not, falling behind on their mortgages. And then another big important thing that happened today was 2 different global banks, the Bank of Canada and the ECB, the European bank. They both decided to pause, as far as their rate hikes go. So that's been good for our markets. We're all kind of connected, and that hopefully plays in our favor going towards our own Fed, who has their meeting coming up next Tuesday, I believe. And then average 30-year rate, where are we at? Last week, remember, we jumped over 8%. We were at 8.03. Today, we dropped down to 7.90. So, we got down here earlier in the week, and then we jumped back up, and now we're back down here. Again, way too high, way too elevated, but hopefully we can stay underneath that 8% level just for everybody's sanity. And then important dates. Tomorrow we got PCE. So this is the Fed's favorite form of inflation data. We get that coming out tomorrow. That's expected. The headline's supposed to stay steady at, I believe, 3.5, and then the core is supposed to drop. So hopefully we get that. If the headline drops a little and then core drops as well, we might get a nice little rally. But we know the Fed's paying attention to employment and they're paying attention to inflation. We don't want inflation to get out of control again. It's been coming down, so hopefully that stays in our favor tomorrow. And then, like I said, next Wednesday, we're coming in with the Fed's, the next Fed rate hike. So that's going to be 11.1. Everybody's expecting them to pause. I believe it's at like 98% pause right now, 2% maybe a cut, which they're not going to do. I wish they were going to do that, but they're not going to do that. But really, we're going to look towards that mid-December meeting, the next one. And then when they make their rate hike announcement next Wednesday, we got to listen to their press conference, listen to their comments, see what they're saying behind the scenes, and try to get some clues about what they will be doing at the next one in December. So we don't want any more hikes. We want them to pause and then hopefully start cutting some point, at least by mid next year, and that will obviously help markets. But again, rates way too high. That's hurting the market. If you're a buyer, if you're an agent and you're trying to get things done, obviously rates aren't helping. But it's good to see the pending and new home sales jump up like that. It shows that the consumer is pretty is bouncing back. They're dealing with the rates. They're finding ways. There's still demand to buy homes. So just imagine what's going to happen. When rates do come down, when there is more inventory out there, we should see a lot more sales. So hang in there. If anybody needs anything at all, please don't hesitate to reach out. I'd be more than happy to help. Have a great week, everybody.